Good day, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trade in all our videos for educational purpose only. You're very welcome to follow any of our signal as long as you are on a sim. We're not responsible for your trade. We're not your financial advisor. So whatever you do it on sim. Please. There is something I want to highlight right away. To all the auto trades are taking a long trade on the ES. If you have not taken a profit, you need to start taking a profit immediately. Let me show you, it has nothing to do with your auto trade. If we look at the ES and we look the amount of resistance that ES have, and then the fundamental, the momentum on this market is pretty weak. It's not very strong. The buyers and the sellers almost even. Another indication there is when the market analyzer is not in sequence, indicating that the market, you're facing turbulence, you're facing a chop market here. So for the auto trade on ES, doesn't matter which auto trade you are using, whether it's from us or somebody else, the rules apply on everyone. That ES is going to rebound from those areas here. It could be the second level or the second level, but there is not much steam going on the ES. The only time you're gonna be out of trouble if this ES able to break all those levels, and once you get to the 39.75, you're out of the wood. So as long as you are in this mid turbulence where a bunch of resistance on the ES, you are in trouble with the auto trade. What I'm saying is in trouble with the auto trade means sometimes you have to consider taking a profit, and I will show you if you don't take a profit, whether you are auto trading NASDAQ, ES, it doesn't matter. Your profit will be wiped up. And if we notice here, you had 2200, and we know what's going on. We should have taken the profit. And now your money shrank in seconds from 2200 to 1400. This is a special message to a guy who refused to look at the market. You have, or you will be losing much more profit up in the air than you actually make. So when we don't keep our eye on the market, you have an average around $1,000 a day, giving it away for not looking at the blue chart. And I want you to see how much did you make out of this one, potato. And from the beginning of this webinar, we said this is not gonna survive long trade. So maybe somebody said, well, my auto trade was making money. So we were showing on our auto trade, it was a 2200 on your table and you didn't take it. And this is the difference when we need to babysit sometimes the auto trade. For that reason, sometimes when you are taking big trades, swing trades, you're not scalping. If you don't keep your eye on the market, you have thousands of dollars give away a day. And maybe somebody say, okay, well then I'll scalp. Okay. On a fast market, when you are scalping, you have a slippage, 2 ticks on the way in, 2 ticks on the way out. We have a bunch of scalpers auto trades in your package. We're not lack of anything. Here is another problem. A guy is not looking at the market. the market going fast. Slippage, what is the scalper average trade? 10 ticks. On the way in, you are losing 2 ticks to 3 ticks on the scalping on a fast market. Exit 2-3 ticks slippage, because they don't want to tell you this, plus commission. What is your profit on the scalping? You just explained to me where's your profit. If you have a losing trade, 10 tick, because you're smart, you put a stop loss based on 10 tick. Now you have 10 ticks of stop loss, you're losing it. On top of that, you have a slippage, 2-3 ticks in, 2-3 ticks out, plus commission on a losing trade. Your losing trade become double the amount as you are expecting, and now there we go, you are in trouble. So no matter what you try to outsmart the market, somehow the market always find a way to make sure ruin our day, and it's always surprising us, the market, and we have to be careful and keep everything tight, and the only one is gonna protect your money is you. So the same story now, this is another example. We're gonna start bringing now, the market is going down to the short side. Now the market is working because the gold was going in conjunction with the ES parallel long, and now the ES is going the other direction. That's fine. So if we are taking the ES short, if we look at the ES here, we can see the market is losing the ground. What is the potential on this ES? The ES dropped very fast, is going back to this number 39. There we go, closed. 39.53, okay? This is a re-entry point. Technical, this is a 39.53 is a re-entry point. If we look at this chart, on the blue chart, you see there is no hope to the long trade. On the ES or NASDAQ, there is no hope for a long trade. And any auto trade taking a long trade is going to lose money. Even if you think you're going to get away with it, you know you are in trouble with that trade already. So what we have an option on the top here. You can direct your market to go short, long. If you see yourself in trouble, close position. If your auto trade is not taking a trade, because I have a guy, he was in a trade live and he used this button here. I don't know what he meant by doing this, because if you use this one and your auto trade is in action, he was surprised because the broker did not hold the price for him. The only time you can use this button when the auto trade is not in trade, because your broker don't know you're going somewhere. So if you want to hold your horse on a trade, and you can pose it, close position, short only, like today. Am I interested to go long? No, I'm not. You can direct your auto trade to go short only, because we knew that trade here, the long trade, is not going to survive. So how is the market now? The market is short. And you can also direct your auto trade to take short only or long only. Or if you wanted to have it both direction, you turn it off and now it's taking long and short. However, When we see cases like this, it does not require a genius man, and if you cannot see it, stop trading, cash your money, and go home. If you cannot see that chart, there is a tremendous resistance. If your eyes cannot see it, that means you're not a trader. There is no dishwasher machine is gonna save you. So quit, cash in, go to Las Vegas. You get a free drink with a beautiful woman. You don't have to hear my voice anymore. But here you're gonna lose your money cut and dry, and nobody cares. So if you cannot see that, this market, there is no long trade. And every long trade you're gonna take, you're gonna lose. If you cannot see that, stay away from this market. It's not for you. Maybe your children will, but you should not be trading anymore until you understand what's going on in the market. And as we see right now, the market can, as we said, this is at the re-entry point, and this is where we consider taking. If you are a manual trader, we're not your financial advisor. You can take a trade from wherever you want, but I'm saying what I will do myself, I will start taking short. Now, if it is very risky for you, Vito, we love your voice. I cannot say the same for you, Vito. Well, also, if you are not sure, or you cannot afford to take a short trade from that area, what you can do, you can take a couple of 3 micro accounts. When the market goes a little bit higher, you can add one more. And then this is the type of an auto trade right now we are working on developing, where the auto trades take points and then cash them all in at once. So as we called it for you, it's a short trade, and this is the re-entry point, and there is no long trade, neither the NASDAQ or the ES at this point. Another thing she can do, every time when a person is in handicap in something, he can find an alternative in the trading. As an example, thank you, sir. Ben, you are an angel. Another things we can do, looking at the market analyzer. On the market analyzer, we have 1 positive on the ES, 2 negative on the ES. On the NASDAQ, we have 1 positive and 2 negative. On the YM, we have 1 positive, 2 negative trend. What is telling us here? The market is not in sequence, and the long trend. As simple as that. When you don't have the 3 signals pointed to the same direction, that means you are in trouble. So when you are auto trading and you see profit, take it. Whether your profit is $1,000 or $900, when you see a trade with a high risk, 2 options we can do. We can lower the trends. Oh, we cannot do this on this one here. But there is a way we can do it, but not right now, because what I have done here is just a break even. You can generate a new one, and you can play with this one here if you want to. But remember, if you want to do this, make sure that when you do this, your auto trade deactivate. This is Ninja Trader. You should be familiar with it. So if this market, where is this market going? What time is it? 10:30, 10:13. Where is the institutional targets? Target 1, 39.27, profit taken on that number in case if the ES able to break that level support, the last border, the last support area on the ES is 39.34.25. If we are breaking this, we are shooting straight to the institutional number. Profit taken, job done for this morning, go home. It's finished. You don't have to sit miserably behind a computer, getting a suntan for nothing. So now that the thing is, when we are auto trading, any given, doesn't matter whether it's range, take, you name it, 9 range, 6 range, 8 range, take whatever you want. It's irrelevant because you are the guy is controlling that auto trade. Whether you are using 10 range, 9 range, whether you are using 6 range, 1 minute, doesn't matter. It's the same problem when you are looking at the 1 minute. Always the 1 minute is your best friend. Not me, not Vito, the Italian guy living in England. The best friend for you is the 1 minute chart. Now what the amateur do? They use rank bar. They have no knowledge using rank bar. They want a company to invest with them. And they are totally blind. They don't see the market. Their eyes on P&L, they are unaware what's going on in the market. And when you are unaware what's going on in the market, you're a dead meat. I don't care where you come from. I don't care what kind of system you have. If you are blind, you're not going to survive in here. If you cannot read and write, you're not going to survive in here. If your eyes are not sharp like hawk on your 1 minute chart, you are just wasting your time and my time. You can brush it off. You can challenge me. I've been doing this now going to 28 years. You can challenge me as much as you want. By not reading the 1 minute chart on a daily basis, you are a dead meat in the market. Not today, tomorrow. And you can blame it on me as much as you want. You can blame it on Ninja Trader. The end of the day, failure comes from the trader, not from the tools. We are a tool providers. We don't have a magic bottle we found on the beach, crystal ball telling you what is going to happen or how it is. We are providing tools. What you do with the tools, you can rack it or you can make it shine your future. It is up to you. So what we are looking at the ES right now, it is one element only. I don't care about the P&L, whether it's 2,000, 3,200 or one banana or one cucumber. I don't care. What it is, we have a problem here at the support, whether we are using 1 minute, 2 minutes, 3 minutes, 6 range, 4 range, banana Renko bar, whatever you want to call it. And as long as we are not breaking this area right now, it's too early to go ahead and start taking a profit at those numbers. What is this ES is doing right now? We need to evaluate what's going on in the market to make decision. There we go. This is the second round. We have seen a profit on an ES auto trade. The first one was 2,200. We didn't take. God put 2,200 on the table. We were too lazy to take it off the table. Now God gave us another chance, and we still too idiots to take those numbers out or take the money out of the table. So it is like the same thing when a guy got stuck on this little island and he sent him a boat, he sent him a helicopter, and he said, God will help me. And God, when he died, what he said? He said, why you let me? He said, I send you a helicopter, I send you a boat, and you still. So the same thing here. And, you know, it is right there in front of you, is telling you what's going on. This trade on the ES, is a dead meat, is a bad trade. I don't leave my destiny to an auto trade to go in here. This auto trade making $500 is not. What we need to do, we need to break even, or maybe what we do, we close it as soon as possible, because this is a dead meat trade. It's a very high risk trade. What's going on in here? Look at this. If you don't take an action on this, it's gonna end up losing trade. Why? Look at those fibs above you. You might make 500, you might make 1,000, you might make 200. Is it a high risk? Yes, it is a high risk. What we can do in those cases, you let your auto trader break even. As you notice here, break even. Okay? I don't want a dummy trailing stop. A dummy trailing stop is for a disaster trader. You should never. I don't know who came out with this brilliant idea. I mean, the Ninja Trader has to provide you with an automated trailing stop. This is a very nice service. But I don't know who gives you this magic idea that you can use a dummy trailing stop and making money. Look at this trade. 1 minute you had $800 and now you have nothing. And if you don't do anything about it, most likely it's gonna end up in zero. There is one rules you have to understand. You will never close a winning trade. When the market going into your direction, you need to get paid for it. When we make mistake, when we goof up and make mistake, we all have experienced this. You take an ES trade, and there we go. Look at it. Didn't make it. Did not make it. So when you have a trade, is a winning trade, you should stay with that trade. You should not use a trailing stop. And they've been taught wrongly by optimization, 10 ticks, 20 ticks, and 30 ticks on an auto trade. Because that guy is telling you to optimize an auto trade, he cannot trade a paperback, otherwise he would not have a dignity to say that. You cannot use a dummy trailing stop on an auto trade because you will never see good money on any given auto trade you have in your hands. Why? Because on a trailing stop, when you are buying a trade or when you are in a position in a long trade, any given day, this market go like a yo-yo, up and down, up and down. How many times in your lifetime, in your career, you go long, you are on the right direction, the market go back, knock you out of that trade, and go in 100 tick in the air? How many times we took the shoe, we hit our head with it? Every time we take a trade on the right direction and we got lucky, and then the market go back, knock us out of that trade. So when we have a winning trade, we have to stay with it. And we have to milk it. We have to stay on that trade till the last tick we know. Maybe we cannot get all the ticks, but we get most of it. And this is where your trailing stop should be based on the chart. Where do you think, if we are looking at this chart here, where is my trailing stop should be? Right above the support area, right here. Why? You are protected. You have a target. You have a target for your auto trade, let's say, is right there. I can see this market is going further. We can drag it further down to the next level. That can give you $100 more, $200 more. So the optimization on an auto trade, let's say you put the first contract is let's say you put the first contract 20 ticks, the second contract 40 ticks, the third contract is 60 ticks, and the fourth contract is a runner. Let's say this way. Most of you do that. So what you are asking for the market to combine with your rules the first trade is 20 ticks, the second trade is 40 ticks, and the third trade is 60. So you're expecting this market to go by your rules. Guess what? The market cares less about yours and mine together. There is no such a thing called first trade, 5 ticks or 10 ticks or 20 ticks. There is no such a thing as the second trade called 30 ticks or 40 ticks. All what you have learned is a bunch of rubbish. Those are when you are optimizing an auto trade, giving you the first target is 10 ticks, which depends on the market, the time frame you are using, or 20 ticks or the 30 ticks. Those are estimation. Those are not predicting next week what the market is going to do. Optimizing an auto trade based on 1 minute, 2 minutes, 3 minutes, 4 minutes is giving you some kind of information where is your best deal if you want to auto trade on 1 minute, 10 minutes, 3 minutes, 4 minutes, range, 10 range, 8 range, 6 range. It gives you where you are with a stop loss average, target average, but all those are not reality. So what those beginners were told from their master, the guy cannot even trade a paper bag, that you optimize the first target, the second target, the third target. Guess what? Those guys that never see big money in the market, those guys, when they are using a trailing stop, the first pullback in the market is gonna knock him out of that trade. He's not making big money, and here's what it is. And then when he is losing, he's losing a big time, and he's making small time profit. The equation is the opposite. If I want to flip with you a coin 10 times, every time I lose, I give you $1. Every time you lose, you have to give me $10. Takes me 1 round, 2 rounds to recover all my losses. So the trailing stop is a nail in the coffin for your account. It's the last nail. And what you were told, you've been told by amateur car salesmen selling auto trade, cannot trade paperback. And you were told by those people that use a trailing stop for optimization, and when you get screwed up, you go back on the drawing table on the weekend and do more optimization. Guess what? You're gonna stay the rest of your life optimizing. You're gonna stay the rest of your life buying auto trades. You're gonna stay the rest of your life buying wash machines until you get the idea that trading is not dishwasher machine. It's not turn on, turn off things. It is knowledge. It is understand, make decision when you're auto trade, taking a trade short or long, determine how much money you want to get, how much you can extend your target, dismiss the automated dummy trailing stop, and you decide when you want to close that trade. If we notice right now on this ES, finally broke that one. Where are we right now? What time is it? $10:28. What is the last defense system? What is the last defense on the support area for the ES? 39.34. Okay? If you notice when you are auto trading, you have 1,300, 1,200 is irrelevant, the PNL. Where is the target one? Right there. What is going to happen when the institutional comes in this area, profit taking? What is going to happen to the ES? What is going to happen? The support become a resistance. Profit taking here does mean they are buying, closing position. If this ES not able to hold on this resistance, it's going to shoot right up in the air at 39.50. What happened in here when you are using a dummy trailing stop? You're out of the game. No matter how far the dummy trailing stop you use, you're gonna be knocked out of a trade. The best way is to you make a decision when you see a number you like, whether it's 200, 300, 400, 1,000, 10,000. I don't know what excites you. I don't know what kind of risk you have. I don't know what kind of money you have. Once you see the number, prevent you going back to the market for the rest of the day. Take it, turn your back on this market and walk away. This is the smartest trader can do. He likes what he gets on one trade. He cash in, he walk away. Any guy sit auto trading 8 hours a day is a disaster trader. Eventually he's gonna start screwing up. When you come in on the first 2 hours, you're fresh. After you start seeing those bars dancing, after you start see smoke coming out of your ears and your nose, does mean you're totally burned out. Now you're not thinking, you're confused. Sometimes you want to go short, sometimes you want to go long, you're frustrated, and now you start screwing up with this market in the wrong direction. The personality, your freshness in the market on the first 2 hours can give you much better performance than sitting miserably behind the computer for 8 hours. Only if you are hedging the market and you're a big guy, you know, and you have your table, your legs on the table with a cigar and an espresso, good-looking woman or a good-looking man serving you an espresso, that's a different ballgame. But when you are sitting miserably by yourself on the market here, and after 2-3 hours, you're gonna start getting tired and you start making mistakes. So what's happening in this market at this moment? We are sitting and gambling with the 39.34. If we look at this pressure in the market, eventually this market is going to hit the target one, profit taking. That is going to confuse all the traders. And now when the profit is taken in this area, what is the possibility for this ES is going to shoot up all the way to the 39.50. Your trading stop become irrelevant to the trading. The smart guy in this situation here, take the profit and get out. Couple more bars down, couple more bars up is irrelevant. You take your profit and you walk away. So now it is 10:32. It is 10:32, and now we're gonna go ahead and start bringing the whole market. We can bring the whole market down right now. We're gonna start with the Nasdaq. 5,000. We're gonna start with the Russell, 1900. What time is it? 10:32. Profit is going to be taken very soon. Take this one out. YM. DAX eating banana today. What we have an ES. We're gonna bring the same chart, the ES. And there we go, we have an ES. What is this market? What time is it? 10:33. By 11 o'clock you should be out. Irrelevant whether you are making 200, 2,000 is irrelevant. 11 o'clock you should be out. What is this market is telling us? What is the momentum? Short. What is the market analyzer telling you? Is in sequence. Short. You see? It don't need a light bulb in our head to tell us short. It don't need the guy to sit in the trading room learning price action for 10 years. Here it is. It's already been done. Here it's done. Sellers a little bit over the buyers. High time frame. High time frame. What is a high time frame? Your 5 minutes, your 10 minutes, and your 15 minutes. What we did, we built a dot. This dot telling you your higher time frame is to the downside. That's what it is. Target is telling you your target is down. You're reading in instruments, cockpit instruments here. There we go. The market is sitting on that level. Everything pointing this market going down. Everything the market indicating is going down. What time is it? 10:35. We are right on time. Everything going in the same direction. Short, short, short. Pullback. We know where is the pullback. The pullback is right there. 39.49. If you are out of a trade, you can re-enter the market short from that number. 39.49.50. We're not your financial advisor, so if you want to take a trade in there, it is at your own risk. We're not your financial advisor. You're not paying us to babysit anyone here. The ES closed automatically. The auto trade, they are set. Once the market changes in direction, they close automatically. So this is all those auto trades on one setting, all of them, straight out of the box on one setting. If this market stays short, and those are not ATR, if the market stays short, they're gonna stay on that trade. Once the short is over, they're gonna close the trade automatically. So the things is they do shut down automatically, but they don't close right away. They give room for this market. So when you are using a trailing stop, you can close at the max trade right there and secure profit. You don't need to wait on the auto trade, because the auto trade is gonna stay on that trade if he thinks still going short. By using a trailing stop, you would have exited long time ago by using trailing stop. If we look at this market here, if you were using a trailing stop, a dummy trailing stop, let's say you're taking a short, you would have exited here. The trailing stop, the market would have pulled back here and got you out of that trade. If your auto trade took short in here, the market did go against you. So no matter what you do, we cannot outsmart the market. Look at this. You have to think the auto trade takes time to react to a trade. 1 and 1 is 2. So for this auto trade to react, sometimes it goes late. Then you're not making money. Here, the market pull back, knock you out of that trade. Again, the market pull back, get you out of that trade. You're not making money. You're losing money. So that's why I'm very much against trailing stop. But we can always right click on any chart and secure some of the profit. It is more profitable for you. I don't know if the market tomorrow, when you are trying to optimize an auto trade, you say the first target 10 ticks, the second target is 20 ticks, the third target. I'm not sure tomorrow your market or your ES is going to apply to your condition on the auto trade. You just optimize 10 tick, first target 20 ticks. I cannot make the market go with my auto trade rules. We have to be flexible. For us to be flexible with the market is the opposite. The market does not have to come to our standard. You were told wrong. You have to come to the market condition, adapt to the market condition, and then react on it. Where did we say this market is going to? Where is this market is going to go short from? Here it is. There is no surprise in here. It's working like a clock. Here it is. Look at it. It's going down. They're monkeying us around. What time is it? 10:41. Let's see what happened at 11. Let's see what happened at 11. Okay, guys, there is not much. We are done for today, and all the auto trade start taking long trade, and there is no long trade. There is no long trade. Again, no long trade. At the moment, there is no long trade. All of them taking a long trade, and you never know when they're gonna collapse down. All of them, they are taking long trade. If we look, there is a heavy resistance in this area. If you're auto trade taking a long trade, cash in as soon as possible. There is no long for today. Thank you very much. We'll see you tomorrow on the same channel. Bye for now.